We routinely intend to achieve a long-term good, yet execute a destructive, short-term impulse. This gap between what we want to do and what we actually do is the defining paradox of human agency. The Apostle Paul described this exact dynamic in his letter to the Romans. He outlined a state of fractured agency, detailing a mind that wills the good, but a body that carries out the opposite. Modern behavioral finance observes the exact same phenomenon. When market participants are placed under risk, stress, or uncertainty, their decision-making systematically deviates from rational models. Emotional biases like fear, greed, and impatience drive traders to override their long-horizon strategies for immediate relief. In biblical terms, this reactive regime of short-term desire is called the flesh. The dynamics of an internal conflict over values share a functional architecture with market participants acting under uncertainty. In both domains, the struggle for control follows a legible structural logic. Look at a standard foreign exchange pricing board. In a Forex pair, the first currency is the base, and the second is the quote. The quote currency exists solely to express its fluctuating value relative to the stable anchor of the base currency. We can map human behavior onto this logic by establishing a new pair, S over F, spirit and flesh. The spirit acts as the base currency. It is the unseen directive principle that anchors a person's true identity and long-horizon value. The flesh is the quote currency. It represents our outward observable behavior that fluctuates dynamically based on our reactive appetites. The price of this pair represents your behavioral exchange rate. It measures exactly how much situational pressure or temptation is required to buy a single unit of your spiritual clarity or obedience. By applying technical market analysis to this specific pair, we can track long-term cyclical growth and diagnose structural inner decay before it manifests outwardly. Translating human flaws into the language of market microstructure takes an unpredictable internal war and renders it as a quantifiable, legible system. This line chart visualizes a strengthening spirit with a bullish structure of higher highs and higher lows. In this trend, the flesh loses pricing power. Temptation must pay more to dictate actions. Conversely, when the flesh dominates, the exchange rate collapses into a bearish trend. This bearish state is defined by impulsive reactivity. We see high variance, frequent spikes, and emotional whipsaws as short-term gratification repeatedly overrides long-term intent. Unchecked flesh produces chaotic, unpredictable market noise. Spiritual discipline establishes an underlying harmonic order, steadily building equity over time. Isolated behavioral events provide limited data. It is the persistent directional trend that reveals which internal currency is actually running your system. To understand how these macro trends reverse, we have to zoom in and analyze a single micro-level decision using the anatomy of a Japanese candlestick. This diagram illustrates the shooting star candlestick, characterized by a small real body and a long upper shadow. The text explains the psychology. Buyers attempt to push higher, but are immediately rejected by overwhelming selling pressure, forcing the price back down. In our behavioral model, that long upper shadow is an impulsive spike in fleshly desire. It represents a sudden burst of anger, panic, or greed attempting to seize control. The small compressed body at the bottom represents a decisive intervention. Through repentance or discipline, the spirit absorbs the initial spike and entirely rejects the impulse. Here we see that exact pattern signaling a reversal at the peak of an uptrend. The upward momentum is exhausted, and the rejection initiates a new downward trajectory. A single moment of disciplined resistance can act as the structural turning point that exhausts a destructive urge and reverses a negative behavioral cycle. Professional traders do not evaluate an asset based on a single candlestick. They rely on multi-time frame analysis to separate short-term noise from long-term direction. This erratic graph simulates a lower time frame, like a 5-minute chart. This is the domain of daily impulses. Contrast this with higher time frames, like monthly intervals. This smooth, rising line tracks character development, identity formation, and stable transformation. An emotional spike on a 5-minute chart does not automatically break a multi-year uptrend of renewal. Spiritual maturity does not eliminate daily volatility. It establishes a resilient, higher timeframe trajectory capable of absorbing localized shocks. When outward actions mask internal decay, we use a technical diagnostic tool known as divergence. Divergence occurs when outward price makes a new high, but the underlying momentum fails to confirm. This is a 1-hour Bitcoin chart. In the upper section, visible price action continues to climb, establishing new highs. But look at the RSI indicator directly beneath it. While the price goes up, the underlying momentum is aggressively sloping downward. Applying this data structure to behavior diagnoses a state of outward ascent coupled with inward decay. Visible life markers, status, wealth, or outward religiosity can continue to rise, even while spiritual drive is deteriorating. When external outputs completely decouple from internal momentum, the system is hollow. This divergence serves as the final technical warning before an inevitable behavioral crash. Modern financial institutions execute billions of dollars in environments defined by fragmented liquidity, emotional overreaction, and adverse selection. To survive, they do not rely on the emotional discretion of human traders. They deploy automated execution algorithms to impose strict structure and eliminate slippage. Spiritual disciplines, focused meditation, prayer, and practiced obedience, function as internal execution algorithms. They provide the systematic framework required to transition from intent to action. Notice how these parallel channels immediately constrain the volatility of the asset. Disciplines alter your default psychological settings, physically limiting your capacity for impulsive discretion. Self-discipline operates as a highly structured rule set designed specifically to override your emotional bias and guarantee execution when under extreme pressure. Applying a disciplined system eventually smooths out the chaotic noise of the flesh, locking your behavior into a reliable upward channel. Viewing human conflict through the mechanics of market microstructure strips away the mystery from our repeating cycles of failure and growth. When the spirit anchors true value, it reprices the reactive fluctuations of the flesh. The cost of impulsive behavior increases relative to the stability of the base currency. You have the tools to read your own charts. Recognize your rejection signals, refuse to trade on short-term volatility, and identify the hidden divergences between your actions and your intent. Maturity requires us to build disciplined execution systems, filter out the noise of the moment, and align ourselves with the long-term harmonic order of growth.